Hello traders, this is Dan in the green room, and we're just doing our morning scanning, and we found this one, Mohawk, Mike Hotel Kilo, has multiple time frame in alignment. So I'd like to review that with you and then answer a question from one of our subscribers about the resistance on the left. But let's start with the left. Well, I'll actually start with his question. He said, hey Dan, what about this resistance to the left? And then I just started saying that unless it's an IPO or steady uptrend to all-time highs, there's always going to be resistance to the left. So it's our job to measure the potency of that resistance in relation to the overall pattern. So let's talk about it. So this was a bullish breakout. Little failed breakout there, deep retracement, all that's bearish. It built a base of support over here over time, and then it broke out here again, didn't go very far. That's still, it's in the rebuilding stage. This was nasty. That was a nasty crack to new lows, but then it closed with a big old bottoming tail. 2 bars sliced through resistance, came back in, buyer stepped up here at the gap fill, and the 50 MA, that's bullish, and now another 2-day breakout. So the concept of transfer of supply is whenever something goes sideways, it's think of it kind of like a wrecking ball, that it is slowly eating away at the prior resistance to the left. So even though it is still there, that is still something to take note of, but this advance right here, wrecking ball ate some of it, and it's not a formula where you can say, well, how much did it eat? I don't know. We're just looking at the overall pattern and the messages of the trends, the pivots, the bars. You got red bar ignored, you got a bullish gap here, and now we have an inside day. So is this going to take off like a rocket? I doubt it, but we're now deep into resistance. And we are holding, look, we're holding the 50% retracement of this bar. So it's absorbing this supply. So if it takes out yesterday's high, that is our entry. And, we're going to have to figure out our stop. But now let's move on to the weekly and the monthly. So the weekly is a multi-month bottoming pattern here. This was a climactic buy setup, where we could have been looking for a W formation retest, because this is what we call a price void. We define the price void as a big difference between the pivot high and the pivot low. So this was a fluid move down, which should have the ability to churn its way up once we get a pattern, of course. This was a breakdown failure. Notice it made a new low, went sideways, broke out, so it now has a higher high, higher low. This was the shakeout that we saw over here. We have this wide range engulfing, inside bar, bullish engulfing. So this actually is the same conversation we just had on transfer of supply. This prior top would not prevent me from getting in based on this weekly chart. You buy the high, stop the low if you're trading the weekly time frame and manage in between. Now let's take a look at the monthly chart. Not a clean climactic buy setup, but surely, a nice sell-off, 280 down to 110. That got cut more than half. It's found some buyers here, stepping up here. They think this is a good value, and we have a price void to the upside. So this is not going to be what we call a core trade, a position trade, where we want to own it, forever. But all three of these have the ability to give us a very big target because of the price voids on the bigger time frames. So I'm going to post, the entry is going to be over the week's high, initial stop, week's low, and we'll also use covered calls, when momentum slows, as we do, to lower the cost basis and improve the probability of profit. But our target, based on this price void, 160. And then we'll just manage in between. Maybe it'll be less, maybe it'll be more, but all time frames are in alignment. And that concludes our lesson on multiple time frames on Mohawk. Good trading, everybody, and see you next time.